What's good, people? Welcome to this Friday Live by the Hood. For those who are maybe watching for the first time, this is our platforms live show that we do every Friday, where we come in, chop it up with the community, and talk about what we have going on in the trading world. Sometimes we have guests, sometimes it's just me and Cora, but the idea is just to come to you live, probably once a week, every Friday at 7 p.m., just to talk about some of the things in the market, answer any questions, highlight Black-owned businesses. But the bottom line is we want to just spend some time talking to the community. We have a very special guest on with us to talk about what's going on and answer some questions, man. I got my brother Spoon in the building, man. I'm gonna tell you a little bit about him in a little bit, but just want to check in with you first, though. Spoon, how are you?
Great.
You good, man? All
Busy
right,
with the
yeah.
market. Yeah.
I could only imagine. I
Apologize.
could only imagine, man. And Core is also in the building. Core, what's up, bro?
Man, living La Vida Loca. Every day above ground's a good day.
This is absolutely true, man. Yeah, so we're gonna talk about some investments and some of the stuff we got going on in the market. Get into Spoon, who's a high level options trader. Talk about trading options in 2020, because that's gonna be a good conversation. We got folks checking in already, man.
Yeah.
Yo, Rick, what's good, bro? How
Yo,
you? Rick, man, check in with me, man. Let me know how you make it out in the course. He's a student now at Bada Hood University, so we want to make sure that he gets all the help and support that he needs. But should we see how many millions he got at this point? But with that being said, let's start where we always start, man. Cora, how the markets treat you this week, bro? What's your investments looking like for this week?
I actually got smacked this week. I got smacked dumb hard. Not even paying attention, going outside my trading plan. I made a couple of dollars, but I lost on one of my accounts. I got smacked for like 4x.
All right, but
So
what, though? That's good to talk about, man. I appreciate your honesty, because you see people who talk about trading and they never want to tell you the law. Everybody quick to screenshot and show you, you know what I'm saying, when they up 100%, but no one really talks about the losses, man. So talk about the losses you had this week, man. What hit you
all
the
right,
hardest,
so
man?
so I had short contracts on Microsoft and on Apple. I had contracts that expired today, and I bought them on last Friday. And Monday, Tuesday, and Wednesday, they Microsoft and Apple basically traded sideways, and I had about 7 racks on them, and they traded sideways for 3 days. And so that 7 racks turned to three real quick. And
you know,
then, of course, yesterday and today, them motherfuckers ran like they ran like they was Carl Lewis in the Olympics. And I would have made all my money back. But I don't like to hold contracts to I don't like to hold them till expiration.
Yeah,
So
sometimes it's tough to get out.
I got I got manhandled and I did them naked. Normally I don't do I don't do my stuff naked. But I would have lost more money if I would have did it the normal way I do it, because normally I trade a spread. I normally I do a long call and a short put, and
Okay.
I would have lost. Actually, I would have actually made my money back yesterday and today if I would have did it the normal way I did it. But this week I said, look, they're gonna smack out this week. I know Apple gonna smack out this week, and I know Microsoft gonna chase it because the market ain't gonna let Apple get too far away from Microsoft.
Yeah, yeah.
So
So
and but
let me ask you a question though. Outside of that play, in the options market, have you bought any like long term things this week?
I
Any
did, man.
crypto, any
I bought
stocks?
a couple companies. I bought a couple companies in the electric vehicle space. So I bought a over the counter company from Canada.
Hold
They
up, you
call
buying OTC companies now?
yeah, man.
Okay, all
Yeah,
right.
man.
Last question, man, because I just want to see everything you got going on, man. I know that you in the process of trying to like build that property down there too. Like, did you find you find what you're looking for? I know you're looking for like if I'm not mistaken, you said you were going to put like a trailer type joint on there, right?
Yeah. So I'm trying to decide which type I want to put on it, and then I gotta meet the regulations and specs. Because even though I got a acre and some change, it's still the spot that I'm in. Everybody got this. It's like a community gym. So I
Okay.
gotta make sure I don't violate none of the recs when I do grab my joint. So I'm still talking to the folks back and forth to see what I'm allowed to do and what I'm not allowed to do. Because I'd drop a damn mini mansion on that bitch. But
All right, so you got a lot going on with that, man. Any moves in the crypto world?
oh man, I just been buying regular buying. I've been staking more Tezos because I want to be a fat boy baker with that.
I
And
heard
I've
that.
been so I've been staking more Tezos. So I actually started a weekly joint where I start to dump a couple dollars into that, and then I get a little bit of that back through the staking process.
Mm-hmm.
So
Gotcha.
and I gotta get with you because I'm looking to buy some silver, but I had so much going on.
No, I got you, man.
I've been trying not to overextend, but that kind of stuff I automated. So I only gotta pay attention to it one time. Once
Mm-hmm.
it's automated, I don't gotta really look at it no more.
Yeah,
Yeah, that's the key. The key is the automation because the only thing you have to really
that's
watch
what
is
it
the
is.
trades, though. But let's get to Spoon, though. Spoon, what's your week look like in the markets, man?
I had a pretty good week actually. I did a lot of more trades than I normally would do in one week, but that's because the stocks was just going up. I did a lot of trades in Tesla. I know everybody they on a FOMO kick with the Tesla, so I did
Mm-hmm.
quite a few trades in Tesla. Then, but I didn't buy no long calls. I did all spreads. Um, I also took out a long position in XLF. XLF is the ETF for financials.
Yep,
Mm-hmm.
So
I
the
got one on them too. I got like 15 of them Jones. I got
yeah.
every X.
So
So
my
since
question is this, though: how long out is your XLF?
to 2022.
Okay.
So
Yep.
pretty much you got to XLF an ETF like that. You got to give it room to breathe because the financials has been beat up so much this year with interest rates, everything else. So pretty much I wanted to give the trade room to breathe. So I took out some 2022 calls on XLF. That's more of an investment trade for me. I bought that and I won't even look at it until 4 or 5 months down the road.
Interesting. That's interesting because I own something similar called VFH. It's the
Yeah.
same thing. It's just
The
Vanguard.
Vanguard. Yeah.
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 I never
Yeah.
even looked at the long calls on that, man.
Yeah. Like
So
the
that's
stock
interesting.
is just too it's too low for me to put money in it. Like is it like a $24 stock?
Mhm.
The XLF probably will go up to $30. So that's a $6 move with the stock price, but it's not enough bang for my buck. So that's why I went out and did options
A couple
before it
hundred
with it.
shares. I know how you got it, man. You get busy, man. We're gonna talk about that in a minute, man. I just want to get
So
everybody checking in some time real quick. Don, what's good, folks? Don checking in.
Yo, my long portfolio doubled this week. That shit went berserk.
yeah. So
My
People
long
checking in for
portfolio
Spoon.
was
Shout out Flight Risk says Spoon. What's up, big homie?
what's going
yeah,
on? What's up, Marsh? Big
Yeah, also
Phil.
Phil checking in. You know what I'm
yeah,
saying? Real estate coach Carter, man. I had a long
yeah.
conversation.
What's going on, squad?
Me and Coach Carter was talking today for a couple hours, talking about investing and stuff, man. Malik's a funny guy, man. But he bought that option business too, which is funny because, like, Malik is known as Real Estate Coach Carter, and we had a whole conversation today, and it was about like options and stock. And my man is about to
Right.
be turned into a stock market Coach Carter.
Yeah, you got to change that name now.
Yeah. So for my week though, I bought another MGK for everybody watches. That's my long play MGK. I tried to do some cover calls, but no one would bite at what I was asking for. You know what I'm saying? I tried to like, sometimes you throw stuff out there fishing to see what you can get. So I'm still no one bit though, but I'm still sitting on a Nokia call. And I got that real long call that we all got caught, that Ford call for 2022.
Oh my God.
Yeah. Yeah, man. I did cop some Tezos, man. So y'all can call me Jeff Tezos. I also got some more like you talked about silver. I got three of these y'all can see them. I know it's kind of small. They're like the 1 ounce, 1 troy ounce buffalo. I got a couple of them Jones still add to the stack. So still out here buying precious metals, stocks, the whole nine. Shout out to Kamari checking in. Once you say Ford, Kamari's gonna fall. Like he got like a
my guy Kamari. What's going on, baby boy?
So Jim, question for you: when you do your covered calls, right? What's like? Just give me an example of what strike price. What's your underline and what strike price would you pick?
Well, here's the thing. I've been running with DraftKings on my cover calls pretty much all summer. And real quick,
yeah, we talked about that.
I left. And I've been doing that because my average price in buying in on DraftKings, and I got several hundred shares, was $20, right? So I've been running cover calls. The last one I got last week was 37.50 was the strike price.
Okay.
And you know what I'm saying? So and I was telling you, me and you were talking offline, and I'm like, yo, this is a game changer for me. I'm getting a couple $100 every week. And you know, it's like I don't have to deal with no tenant. And we're gonna talk about that in a second. We're gonna talk about that in a second. Coach Carter says if he hits 1,000% return, he's gonna change his IG name. He said I came just as you said forward. See, it's like saying it's like putting the bat signal out. You know what I'm saying? But for the folks watching though, man, like I know Shawn pretty much my entire life, man. Like he's younger than me, but we grew up on the same block, and it's crazy because you know, so we see each other from time to time. We talk, and he's one of the first people to talk about options to me. So I'm a real estate guy, and even Spoon was buying real estate, and I was even a stock market guy, long-term investor, buy and hold. And years ago, I'm talking about close to a decade ago. That's how long that he was on this options kick, and he's telling me about, no, you don't have to buy and hold. You need to trade these options. And I'm like, what are you talking about? He started talking about the Greeks and the alphas and the omegas and this like, he was speaking a foreign language to me, like. So it's crazy. So then, you know, as I get further along in my investment journey, I start learning about options, you know, reach back out to him. And, you know, he still be over my head to this day. So Spoon is next level. So I definitely wanted to get him on and talk about, like, you know, in 2020, how is he running his business, considering that now you have so many more people in this space. And something that he's been doing a decade ago. I know you're a young guy, but you've been doing this for so long, man. So my question to you is this: has your strategy changed now with so many people in the space, and you know, so many people talking about it? Like, what's your strategy like?
As far as people being in the space, the more the merrier. That's the thing about the markets. You really don't have competition when you could tell everybody. It doesn't matter. You stick to your strategies. So far as strategy wise, you got to change your strategy with the market. If we're in the up market, you have an up strategy. If you're in a down market, you got a down strategy. And we're trading sideways, I got a sideways strategy. So pretty much, I got a strategy for everything. When the stock is too high or the price is too high, I do a different type of call spread, credit spread, things of that nature. So I'm always changing strategies. Now, don't get me wrong. I do have my bread and butter place that I consistently go to week after week after week. And pretty much that's my weekly income just off of those strategies. But you should also be aware of the economy, things of that nature can always change.
Mm-hmm. What's your favorite, like, well, let me ask you this, like, what's your favorite strategy, you would say? You said you have some like bread and butter. Is it a spread?
Yeah, it's definitely spreads. As far as my stock portfolio, I do the same thing most of y'all guys do, is cover calls against my stock portfolio.
Okay.
Collect the premium every week. If the so happens my stock is going to be called away from me, I'll buy the call back and just take the loss because I want to keep my ownership in the stock. So
Okay.
A lot of people just let the stock go. Not me. I'm buying the call back. I'll take the hit, and it's not going to be that much of a hit. I'm not letting my stock go if I love that company. Far as my other strategies, another strategy I do is a call credit spread. A lot of people call it in and out spread. It's one strike in the money, one strike out of the money, and pretty much that's risk one to make one. So you're risking $100 to make $100. The good thing with that strategy, you don't have to wake up in the morning and worry about losing $1,000. All you can do is lose that $100. That's it. If you need to up your contract size to make more money, you can do that. Pretty much, I might put those on 2-3 times a week throughout different companies. So that strategy has just been an excellent strategy for me throughout my whole career as far as trading options. So
now, let me ask you a question. You said when you run your cover calls, right? If you think you're going to lose, you actually will buy the call, right? Have you ever tried to like sell the put on the same company on the flip side? So just let it go, but then sell a put and collect the premium and try to buy it back at the number you want?
No. If I'm selling a cover call, that's the strategy
Mhm.
I'm doing. I'm not going to mix up my strategy. The purpose is for me to collect the premium on the cover call. There's no need for me to sell a put just
No,
to
no, no.
get the money.
I'm saying if you end up losing it, like so instead of buying the call yourself, letting it go, but then selling a put, collecting the premium, but they're actually trying to buy that company back at the price you want. So running the full circle with it. I know that that's something
No,
that
sometimes I do, but some of the companies I own, I've been owning these companies for years. So some of the companies I don't run it back because
you emotionally attached to these
I might
Jones.
have got in the company. Real life example. Yeah, like real life example is 3M. I've been buying 3M for the last 2 years. I've been buying 3M when it was at $200. I done bought 3M when it's $130. So I've been buying 3M up and down. So 3M is a retirement stock for me. So I'll definitely do a cover call, something like that. I don't want to lose the stock because also I collect a dividend on the stock also. So I don't. That's the stock I'm not willing to let go. So I won't buy in, let the stock go, and wait for it to pull back. No, I won't do that.
Interesting. All right, so that's interesting because talking to people that run that same strategy, a lot of them will let it go and then just buy back, but keep collecting premium on the other side. You know what I mean? Like
Yeah,
things fluctuate. So that's one strategy. The one you're talking about, it also
Yeah,
works.
like on a company like that, if you want to buy in on buy more of it instead of running cover calls on it, you could just sell puts, and then you never have to worry about whether or not somebody wants your stock. You could just keep selling puts on it at the price you wanted at, and get the same amount of
yeah.
money, and
So I actually
increase your
got.
position.
Yeah, I've done that. Me and Jim was just talking about that. We would talked about that with DraftKings.
Hmm.
So he was telling me he was doing cover calls, Corey, on it, and I was telling him I want to own the stock, but I don't want to own it at $37. My price was set $35. So a lot of people out there, this is free joint. You could sell a put, a $35 put in DraftKings, and DraftKings tank come down for that $35, they'll actually put the stock to you. You could be put 100 shares of that stock. That way, yeah, I collected the premium. Premium might only be 50 cents, well, $50, but that's $50 a week I was collecting on it. I had the stock pit to me at $35, but that's my purchase price. That's where I drew my line at. Say I wanted to purchase 100 shares of DraftKings. Let's say DraftKings never hit the $35 mark. I would do that trade every week, week after week after week after week after week, and just collect $50 on it.
Yeah, that is a piece of game right there. Because basically, what you're saying is, I'm going to buy at my price, and if I don't get it at my price, you're going to pay
Uh,
me anyway.
yeah,
Yep,
So
and
you figure
and then you can run the cover calls on it after that, because it
afterwards,
doesn't pay because it
a
doesn't
dividend
pay
or
a
nothing like that.
dividend. So
yeah.
basically, you making that stock, so you don't have to worry about whether a stock pays a dividend if you run cover call.
Calls.
But that
Yep.
was a
So
strategy, yeah, and that's a strategy I was talking about when you continuously do that. So even if you do lose it, let's just say for argument's sake, all right, use DraftKings as an example. When I had those 37.50 cover calls, if someone would have purchased those off of me, it hit 37.50, and I do what you just said, put it back in for 35, and keep collecting it until eventually it drops and I buy all my shares back. Remember, I just sold them for 37.50, so I'm buying them back for 35. But in the interim, I'm going to keep collecting a premium until people
premium.
me at my number. That's
Yeah.
a powerful strategy when you think about it, because
Yes.
if you're going to buy a company, and again, just want to put this out there, this is not investment advice. We're talking about things that we
Yes.
do just for entertainment purposes. But
Any. Yes. And
I want to
thank
make
you.
sure we put that
You
out there.
caught me. Thank you. I forgot.
But I do want to say that it's a powerful strategy, because you're saying, listen, sell me the company at the price I want to pay, and if not, just pay me.
Yep.
And that's a great way to buy stock if you're planning on buying 100 shares of a company. Why not pay the price that you want to pay? And if you can't pay it, get paid just to keep trying to make that trade.
Yes.
Yeah. So that's a game. That was a game changer for me in learning that when trading options, the cover call strategy, as well as selling puts. The combination of those two things kind of changed how I looked at the options market as someone coming from real estate. Because coming from real estate, you like to collect, rental income every month. But I never thought about being able to use the equity, because I have companies that I've owned 100 shares in for years. Like I've owned 100 shares of Coca-Cola for a couple decades at this point. I'm like, I could have been running cover calls every week. I don't know how much money I lost, but the fact of the matter is now that you have that game, so it's important to share these kind of games because people out there that own shares, you can literally use your shares to print money like it's a piece of real estate.
Yeah.
That's powerful. So Spoon, let me ask you a question. The last time we had you on the podcast, you were talking about and I want to put this up there. Shout out to Kamari, put the little John up there. This is for entertainment and educational purposes only. That's right, Kamari.
Thanks, Kamari.
But Spoon, last time we talked to you, as a matter of fact, you had came to our summer camp and we were talking, and you were talking about a piece of real estate you had and the tenant you had, and you was like, "Yo, this lady pays every month one time, and I'm still done with her because I'm tired of being a landlord." Like, so, how you doing in a real estate game? You still hold on to your properties, or you getting out of it?
I still got my properties. I haven't bought anything new. I was tied up in one deal and it fell through, but I still got the same amount of properties. I haven't bought anything. The one deal I had, the title wasn't clean, so I just let it go. So, but other than that, I still got the same properties. Speaking of the same lady, the agency that she's with, she was so far back in her rent, they just cut me a $5,000 check.
Nice.
So I was happy with that, but I'm like, damn.
Yeah. Shout to Flight Risk, man, too, for putting this out there. Remind me, man. Yo, for those watching, please hit the like button, whether you're on Facebook or YouTube, hit the like button and share this with your friend, man. Appreciate you, Flight Risk, for saying that. So now that you understand, like I tell people, when it comes to options, you next level. You're the guy I get information from. So, is it difficult for you to even want to be a landlord when you know that you can use your money to print money? Like, how's that for you when you're looking at a real estate deal? Does it change the way you look at real estate deals when you say, look, I could take this money or I can go over here and do this?
100%. That's why I haven't bought a property in almost 2 years. I haven't bought a property in almost 2 years because of it. But yeah, 100%. Like having my money just roll over in the markets over and over and reinvested it in the market is just a no-brainer for me. I got into real estate because I wanted to diversify pretty much. That's really what I wanted. I wanted to diversify my portfolio, and I wanted to give something to my kids once I was out of here. So, and a piece of property is a good piece to start out with as kids. Of course, they'll have stock and stuff, but I also wanted for them to have something once I was gone. But those are the main reasons why I really got into real estate.
I got you, but it's hard to pull the trigger on deals, and that's kind of the conversation that me and Malik were having earlier. He was like, man, don't let this trade and hit 1,000, man. Hit 1,000%, man. He might leave real estate alone. He said,
I'm up 100%. Me and Malik made the plays same day.
He told me he's up 100%.
I'm up 100% already.
So, man. You hear this, Spoon?
I literally put these trades in 2 weeks ago. I'm up 100% in 2 weeks.
I'm telling you, you buy the right strikes and a good company.
No, I ain't buy no companies. I bought all ETFs. I bought all ETFs. No, I bought 2 companies. I got Apple and Microsoft. So I bought all ETFs that link with Apple and Microsoft, and then I bought Apple and Microsoft. Leaps.
I want to talk about your dude's greed, though, man. Let's talk about that for a second, Spoon. All right, so in a lot of people's opinion, Warren Buffett might be the greatest investor ever, right? I want to see if you study this. What do you think his annual return is? And for anybody out there watching, man, I want you to look up, see what Warren Buffett's annual return in terms of, and everyone knows who he is. What's his annual return? I'm gonna look it up myself because I'm gonna talk about these dudes' greed real quick. What you think it is, Spoon?
You talking about money wise, or you talking about percentage wise?
Percentage wise. What's his percentage? What's his annual return? Yeah.
30 to 40%.
20.5%.
20.5, yeah. All right.
Now people think the rate of inflation is anywhere between 2 and 4%. Warren Buffett's making 20% on his money. The S&P 500 over the last several decades is about 11.5% right now, and he's double that, right? Which is why people consider him like, they call him the Oracle of Omaha, right? So here's what's interesting, man. I was talking to Malik today, and then Corey just said, them dudes is up 100%. And I was telling him, I'm like, man, yo, take your bread. And then, Rihanna, you're like, no, I want 1,000. I'm like, yo.
Yeah. I'm not even gonna look at them Jones. I'm not even gonna look at them Jones until election day.
I
I'm not
understand.
even gonna look at them until election day.
I'm not saying nothing's wrong, because here's another thing we're talking about. Every trader and investor has to have their own strategy. You have to do what works for you. Like,
yes.
But I'm mad conservative, right? And the reason I'm mad conservative is because I've been investing long enough to see what happened to people at the .com era. I saw what happened to people in 08. I was telling you today, a dude I know in 08, he had a portfolio of 800 racks, and it went down to 80 racks, and he was thinking about killing himself, right? So when you live through and see that kind of stuff, yo, I'll never have screenshots of 1,000% return. If a Joan hit 100%, I'm going. First of all, I might not even get to 100%, because once you get up 35, 40, 50, I'm out. Where do you stand on that, Spoon? As someone who has the kind of experience you have.
It's depending on what strategy you want, to be honest with you. Far as an overall portfolio, if you're getting 30% to 40% a year for your overall portfolio, that's great. Now, I know a lot of guys, they want 100 to 1,000% on a certain position or one trade. That's fine also. It's really dependent on what type of strategy you're doing. Like Corey just said, he got leap contracts out to 2022. I wouldn't take mine off if I was at 100%. I just wouldn't. You know, we're talking 2 years from now. Mm-hmm. So at that point, if I'm up in the game, I'm up in the game. I'm going to keep my contract. If I'm scared, if I'm worried about it, or if I'm worried about the position moving away from me, I'm going to sell a put against it. Also, Corey, you can also do this. Since you got a 2022 leap, this strategy is called a counter strategy. You could sell shorter term calls against your long-term call. So that way you can collect premium against your long-term call. It's the same thing as a covered call, but you're only doing it with options.
All right, you got to break that down for 1 second. I want to get a couple more comments up there, but you got to break that down, because that was game right there. Kamari was saying 15%. Don was saying 16%. He said, Kamari said, let your winners run. Let your winners run and cut the losers. Listen, again, I know I'm more conservative. I sell and then try to reposition, because the market's moving. So I try to sell, take my bread, and then reposition. I've done that.
It's really dependent on the strategy. If you're doing spreads, I wouldn't recommend you going out trying to win 100% in a spread. I wouldn't recommend that.
Explain that strategy you just told us, though. So if you have a leap, something that's out to 2022, at the same time, and you have you're already up 100%. So what did Malik say he's up right now? He said we up 189% on XLY. All right, and that's what 2022.
Okay.
All right, so Spoon, what's your strategy? They're up 189% on the 2022 call. They have a leap. So what's the strategy you were explaining where you can sell calls against that?
All right, I will hold on to my leap call pretty much. Can y'all still see me or no?
Yeah, we got you.
All right, so XLY. I'm going to XLY now. That's what I'm doing on my chart.
Okay. Yeah, no problem. So, see, y'all up 189%. And again, I'll tell you, I know that it's more conservative. If I hit 189%, I'm out. I'm taking my bread, and I'm gonna try to get back in and make 189% again. But I understand, each person has to have their own strategy. But I want to see what Spoon would do in a situation like this, being up 189% on XLY. For the folks out there watching, please share this video, hit the like button for us, ask us any questions you have about options or stocks in general. Like I said, Spoon has a wealth of knowledge. He's been doing this for a long time, man. Dude was telling me about his options trades a decade ago. And he knows strategies that that I don't know. I'm saying he's about to break one down for us. So
hold on, I need to pull up one more thing. Give me one second.
Got you. So Corey, what are you thinking about doing? You just gonna let it ride?
Man, listen, I check them Jones quarterly. I don't even look at them. Because again, you like you said, you got the itchy bond finger. If I'm already up 100% on the money I put in. So at this point, I don't feel like I can lose. And I got 17 positions. All I need is for one to pop. If any one of those pop for 1,000%, I made my money on all of them.
Man, listen,
So
man.
it doesn't even matter. If I listen, if I got a 1 in 17 chance of popping, right? All I need is for one of them to pop. I don't even need for all of them to pop. I'm looking at this like a yearly savings plan.
I
If
understand
one
what
of
you're
them
saying,
goes
man, but I'm living with trauma and PTSD, man, because what I remember is like I understand what you're saying, but the thing about it, when things go bad fast. So I remember years where cats had bread and they was trying to get out and they couldn't get out because it was so much volume because like stuff fell off a cliff. Like I lived through that. So for me, it's like, yo, I'm literally living with financial PTSD.
Let's just say in November. Let's say in November we go through some trauma with the election and all them joints tank. I'm gonna buy 10 more of each one of them Jones.
Yeah.
Because I know the market going rebound. I don't got no. I have no fear. Like I told you, I lost 4 racks. I lost 4 racks this week, and I ain't even flinched because I know I'm gonna get it all. I'm gonna get it right back.
Pretty much
that's that
in a
hustler
strategy
spirit,
like
man.
that,
That's that gambler spirit. Because I was talking to Malik today, and he was like, "Well, if it all goes to zero, it goes to zero." I'm like, but go ahead. What's the strategy you will run with that, Spoon? What's your opinion on that?
So pretty much, I would go out to October 20th. October 2nd, go into that call chain. I would sell the 155s against my current position. The 155 call, you'll get $60 on it. The first day, the XLY I have, I'll sell it back off. You'll be profitable. I'll probably walk away with 50% of that. So, and that'll protect me in the long term, as far as me taking money off the table. Also,
hold on, man, I want to make sure I'm clear on what you're saying. You're saying that you can actually sell calls against your leap.
Yeah, you can sell a call against your current call. Yes.
Okay.
The strategy is called a counter. That's basically the strategy.
Okay. All right. Sell calls against your leap. Okay. All right. So I hope y'all people out here paying attention to write this down. This is a game right here. Like you're selling calls against your long-term leap, and you can make money along the way as it gets closer and closer to 2022.
Yes. Or you could just buy a put also. If you feel as though it ran up enough and you think it's due for a pullback, buy a put.
How many, so when you do this strategy, how many times can you do that? Like in terms of that call, you said October 2020. So, after you get out of that, can you
you can redo it, Jim. So pretty much you don't have to wait until October 2nd to sell this call off. The first down day, if you got a 5% down day in XLY or a 3% down day, that call is going to be worth money because you're selling it. So pretty much you could pull it off the first down day. You don't have to wait to sell it off. It's not a matter of you waiting. I would hope no one waits to expiration.
That's actually fire. So you're already up, and if it does drop, you're gonna make money on that side too. And funny thing is, you're gonna make money because it's not gonna keep going up every day.
Nothing goes straight up.
That's crazy. All right, so Malik, I hope you're watching, man. That was a gem right there, man.
I knew I could sell calls against it, but I didn't know. I've seen people, do the calls against it and put it out to the same date, and run a cover call out to the same date and try to make $3,000 or $4,000 out to the jump. I ain't doing all that, man. That shit is a mess.
That strategy right there, Corey, it's just the same concept of running covered calls, but you only doing it with options. It's the same concept.
Got you.
All right. Man. Listen, I got a portfolio full of leaps, so I'm gonna be in your inbox, dog, because you're gonna set this going up and it's going down.
So
listen, you blow my mind with that one, Paul. It's like I'm sitting here like that changes everything. See, and this is what I mean, and this is why I was asking you about when you start learning how to use your money just to make money, because you took it another level, man. Shout out to our sister Road. She said she's up 20% her first week on Robinhood, not doing options yet, just buying fractions.
Congratulations.
Yeah, exactly, man. You in the game now. Funny
Congratulations.
That's the
game.
Getting the game, yeah, that's the best part. And you up 20%, so you see the power of it. Yo, that's next level right there, Spoon. I appreciate you sharing that because that's like insurance almost.
Yeah, pretty much. That's exactly what you're doing. It's basically insurance on it.
Especially when they already up.
Yeah, and if it runs past the call that they sold, That's a good thing that it ran past it because now they're back in the profit. But
That means that it's more than 189%
yeah,
at that point. At that point, you probably
yeah,
over 200 and some
you
odd percent.
still you're still running up. So it's still a good thing.
So all you're doing is buying insurance against your leap.
Yeah.
That's hard, yo. Yo. That's
Yeah,
amazing.
I need to know what kind of capital expenditure I need to put out on those so I can put that kind of cap, because I don't really put no capital in that account. Once I bought my leaps, I don't put nothing in that account as far as capital.
Yeah, well, to be honest with you, it's depending what brokerage you with, but most brokerages will recognize, like if you're on TD Ameritrade, which is more of an advanced brokerage, they will recognize that you own a leap or a further call out, and that you're shorting or selling a call. So they'll recognize it and say, all right, he already owns a call. So what will happen if you don't have enough capital in it, and let's say you still own the call that you sold, if you try to sell your leap call first, you're going to get a message and it's going to tell you like, you can't do that because you'll be short this contract and you don't have enough capital to cover it. But as long as you own the leap with it, you'll be covered.
Yo, that's a game changer, yo. Like that's a game changer. He said he gotta run that back. Hold up. We're gonna let him break it down one more time. Like everybody out here, like, so you got, wow, exactly. Like, yeah, wow. That's the next level. So and Malik wants you to run it back. So
all right.
And I'll try to guide you through. So what you're saying is if you own a leap out the 2022, we're going to use the example of what Malik and Corey already have. They're up 189%. You said what they can do is do a shorter term leap. You said October of 2020.
I just looked up something I would do. You don't absolutely have to go to October. I'm looking at my option chain, y'all, right now, y'all. So I'm not sure if y'all can see me, but I'm looking at my option chain. I'm looking at the October 2nd. That's 42. That's 42 days out. And once again, I trade with Greeks. That's just my thing. I will look at the Greeks, and I'm looking at my Greeks, and I'm like, all right, bet I could sell a delta of 23.
Yeah, see, he started to talk that Greek talk. This is when he starts. He getting into his
pretty
his
much
Cleon Star Wars bag.
I'm going to try to scale that back a little bit. Pretty much, whatever strike price you think the stock, like XLY, if you don't think it's going to hit 155 by time October 2nd, then sell the 155. Right now, the 155 is trading at 92 cents, which really is $92. So when you're looking at options, they break it down in cent, but it's really $92 because you got to remember there's 100 shares, so it's 92 times 100. So that's what they're selling it for.
What you're doing is you're selling a call. You're selling a call against the lead they have.
Yes. So I will own my lead.
Let us know if you.
I will own my lead. I'm not planning on selling it. Then I will sell another call against that. A shorter term call. So basically, it's insurance. So we all know the election is coming up. We all know it's volatility when it comes with the election. So with that being said, regardless, with the volatility that comes with it, wow, sell a call. You collect the $92 on it and call it a day. But you don't have to wait until then. If we're destined to have a down day,
I have a question because, like, I did that joint in Robinhood because I never planned on touching them except for quarterly. You know what I mean? I played myself because I normally put everything in TD Ameritrade. I got like 4 TD Ameritrade accounts, but I was like, I ain't want to get caught in that TD Ameritrade vortex. And so I put that in the Robinhood joint because I was like, all right, I'm only messing with it quarterly. I don't gotta, you know what I mean? But now you saying this, now I gotta redo the whole joint.
You wouldn't be able to do that over there?
I don't know nothing about Robinhood, so I can't tell you.
Oh man,
yeah. About Robinhood.
You try it though. You should be able to do the same thing. But I know he's gonna say that. Spoon been doing this before there was a Robinhood. He goes back pre-Robinhood.
Yeah, Robinhood.
Camille got Camille over there thinking, man. Shout out to Camille, man. Camille is a crypto god, man. Hey, Camille, by the way, man, I told him for now on they gotta call me Jeff Tezos, man, because I'm all Tezos right now. Since when the inception just happened. We got a question for you, Spoon. What's in that cup?
It's Coke, one of Jim's favorite brands.
Hey, listen, man, you already know, man. Shout out to KO. Shout out to KO. But oh man, listen, I appreciate you sharing that strategy with us. That's a game changer, man. Like, do you do a lot of leaps yourself?
No. Let me be honest, I don't.
Okay.
My leaps are normally down because when you think of a leap, I need y'all to stop thinking of it as an option. That's investing. So when you're looking at leaps, you need to be evaluating the fundamentals of companies, things of that nature. You need to really get into it because you're making a long-term investment. You're not trading options, even though you're buying an option, but realistically, you need to really look at it as you're buying stock at that point because you're investing in the long term of the underlying of that company.
Yep.
So you really need to look at it that way when you're buying leads.
That's an interesting thing.
When I did my
lead in the beginning, right?
Example,
and I didn't even I apologize. But you said something in the beginning about a leap, and which now is making sense that you don't look at a leap as an option because you said that instead of buying 100 shares, you would rather buy a leap in the company. So you look at a leap as something different than an option.
100%. So when I don't like a sector, I should say, when I don't like a sector, I'll buy an ETF within that sector. If I can't find a company that really stands out in that sector, then I'll buy the ETF. Prime example, XLF. I don't like no financial companies right now. I don't like the banks. My financial companies, to be honest, to be forward, this is just me, is Square and Visa. That's far as me. As far as like the JP Morgans and the Wells Fargo's, I really don't like them. The interest rates are tanking. So at that point, the financials are not going to fail because the government will not allow the financials to fail. So at that point in time, you have to sit there and pick through the bank stocks to figure out which one is the best. So I'm like, why pick through them? Buy them all. Buy XLF. You just buy them all. So at that point, I look at the share price, and it was only trading at like 24 or something like that. I said, that's not going to give me a bang for my buck. I need more. So what I do, I went out and bought a leap in it, and that's going to give me more money or more leverage within that.
All right, so that's interesting because we went through the same analysis. I went through the same analysis, but not having that understanding. What I did was I bought several hundred shares of VFH with the same analysis, though. That's what's interesting. It's the same analysis was I don't want to pick one company. I don't want to buy JP Morgan. I don't want to buy Wells Fargo. And VFH also includes Berkshire. They have Berkshire as considered so their top three holdings are JP, Wells Fargo, and I think Berkshire. Okay. They consider them a financial. So I said I'm just going to buy VFH as opposed to trying to pick one company. So we had the same analysis.
XLF got the same top three. It's JP Morgan Chase. It's JP Morgan Chase. I think Wells Fargo was second or third. I think it's JP Morgan Chase, Wells Fargo, and
I know VFH. Well, Berkshire is number 2 after JP.
Berkshire B. Yeah, Berkshire B.
Yeah, but my point is, we went through that same analysis, but the difference is you decided to buy the leap.
Yes.
And I just bought several hundred shares of the actual asset. So my plan was that I could, probably try to sell some cover calls against that or whatever. But you took a whole different approach.
So let me ask you, how much capital did you think you tied up in that?
Too much. Now looking at what you're saying, I tied up several $1,000s in that because.
So let me tell you, I tied up for each of my contracts. I tied up $195 for each contract, and
I tied up like 20 grand.
Yeah. So I tied up $195 for each contract, and if it moves up, I'm sure my gains will be more substantial because I'm owning or I'm controlling 100 shares, depending on what happens.
One of those Jones.
Yep.
That's why I chose leaps over individual companies. That's why I changed my whole portfolio. When I told you I changed my whole portfolio a couple weeks ago, I was looking at the same thing. I was like, I got all these individual companies, and I'm running covered calls, and I'm doing all this stuff, and I'm like, man.
But until Spoon just broke it down that way though, and that's why I'm glad you came on with us, because you have a different way of looking at things. Until you broke it down that way, I never looked at a leap. Not that I don't look at options as investing, because depending upon how you do it, it's still trading. But I always looked at leap as a form of an option, because it is. But
it is.
You're saying that it's a different way to look at it. When you look at leaps as an investment as opposed to an option, that kind of changes everything.
Yep.
Yeah.
So when I look at
go ahead.
Yeah. So when I look at leaps, I look at it same way as I look at buying stock. I look at leap contracts. That's the same exact way. So I think of them as one of the same, but I'm leveraging my money way better in buying leaps.
Yeah, you are. Yeah. See, and the thing is, for me, I come from a traditional buy and hold background, like with real estate and stuff.
Ownership.
So when I tied that bread up, I don't plan on, like, I was just going to hold it forever. Like, you know what I'm saying? But the thing about a leap is you still, it's more of like a, it's not short term, but it's not long term either. It's like somewhere in the middle.
You can get out at any point. As long as the contract got volume, you can get out at any point. So it's still liquid. So it's not like, unless you pick some illiquid whatever. That's why I'm saying, that's why I went and changed my whole portfolio, because I was looking at the gains of some of the individual companies in my portfolio, and I was like, man, if I would have bought the leap instead of the company, I would have made 10 times as much money instead of buying the company.
It's an interesting point you brought up, Corey. So let's talk about that for a second. Let's talk about volume. What kind of volume do you look for when you're buying a leap out? So when you look at, so you already said you look at a leap as an investment, not really an option. What kind of volume are you looking for?
I'm just looking for I'm just looking for volume. I'm looking for like 500 volume for a year and a half out, for 18 months out. If it got anything anywhere around 500 volume, then I'm okay with it. I won't buy nothing. Or if the company itself has like 10 million to 20 million volume every day, then I won't worry about what the leap volume is over time, because I know as the time gets closer, the volume will pick up on the leap. So, but I want some original. I need some original volume, so I don't be paying some wide crazy spread. So I'm looking for the original volume, so I don't pay this dumb spread. And then I'm looking for the company volume to make sure as the time gets closer for me to sell my leap, I can sell it without no issue.
Yeah, so before Spoon, I want to get your opinion on that. But before I do, I just want to tell you, like, again, going back to my finance PTSD and trauma, one of the reasons I don't mess with penny stocks at all, and I cuss at people when they ask me about them, is I was trading penny stocks a couple of years ago, and I had some crazy winners, crazy percentage, and couldn't get out at all. So I'm sitting there up 800%, and nobody still wanted it. I'm like, what am I doing here? Like, I'm doing something wrong, because I didn't understand the concept of volume. You know what I mean? So
liquidity is king in options. It gotta be a liquid asset.
King.
It's king.
So what do you consider? Yeah, go ahead. What's your opinion?
I don't trade pretty much nothing. 100 shares. I mean, 1 million shares a day.
Yeah, it gotta move.
1 million shares.
It gotta move at least. I like 2 million, but I'll take if it trades 1 million a day, I'm good with it.
So when you're looking at leaps, you can't look at the volume, because there's not many people out there buying. When you're looking at volume, you need to be looking at the money price, pretty much. So pretty much whatever that stock is trading at that day, you open it up and see what the at the money price is, and see your volume at that moment. Because like Corey just said, once you get to 2022, the volume will pick up. If it's a good asset, the volume will pick up. That's another reason, like Corey also said, the bid, a lot of people don't know. You really need to be looking at your bid and offer spreads. I was just telling a couple guys there at work, like, yo, y'all need to be watching y'all bid and offer spreads, because pretty much you're giving too much leverage up to the market makers. If you're buying something, it's almost like buying a used car. As soon as you buy it for $20,000 on a lot and you drive off that lot, the moment you drive off that lot, you try to take that car back, they're like, no, we're gonna give you 13 grand for that joint. You lost 700, about 7,000 right there.
So let me tell you how I bought into all of my Jones. So what I did is I put in a price that I wanted to pay, and then I put a good till close offer on them Jones. So I got the price on each one of them Jones that I wanted.
Yep.
I ain't even look at it. They just sold into my account. I put the offer in at the price I wanted. I said I'm paying that price. So on the next red day, every one of them Jones came right into my
in your account.
Right into my
I started
price.
doing that, and I was shocked at sometimes people would sell me stuff that's already profitable. I'm like, why the hell did it sell to me? Because I would I tried this week, and that was a no days. I tried to put something out there in a cover call this week, and nobody bid. But I've done this several times where I'm running a naked call. I just put like a certain number up, and someone will fill it, and I'm like, yo, I'm up 20% before any like. So a lot
that's
of times
the market makers. The market makers make the market. One of the XLF, I bought one today. I've been buying them for a good while, but it was selling at $207. I put my strike in at 195. It got filled instantly. It got filled.
And it was asking 207.
They was asking 207, and I got in at 195. See, this is the problem with like retail investors. We're buying at market prices. No, work your order. If they asking $2 for it, put in 195. If you don't get filled and you about not getting filled, cancel, put the order back in, put it back 196, 197. Eventually you'll get filled, but stop being scared of losing the position. Start worrying about your income, because the more money you keep in your account, the better it is. You want to keep your money in your account. The market makers, they're gonna make whatever they want.
The thing is, these joints is for a year and a half out, right? So I put that good to close order in. I don't even gotta look at it. At some point, the market is gonna come back to my price that I'm willing to pay.
I think, and I hope that didn't go people's head. That was a bar right there. Like, stop paying market price.
Stop paying retail.
No, because
I never pay retail for a stock, man. I haven't paid retail for a stock in about 6 months, because
people will go to a car lot and argue about that, but not do the same. Like, that's a great point that you could just like but that takes patience too and discipline, because a lot of times when you're in the market, you want to get your stuff right away. But if you have patience and say, no, I'm only willing to pay this price, and if you can't come,
I do that with my nakeds too. I do that with my nakeds. I put them 2 or 3 months out. I put a good till close order on there, and then I let it roll back into my price range.
Yeah, but that's what I was talking about. I've done that with nakeds, and I'm shocked. Like, people will sell me stuff that's already profitable. I'm like, how? Like, I don't. Sometimes that shocks me. Like, dude, I'm up 20% and didn't do anything.
Yeah,
like you just gave me what I wanted.
Like Apple this week. If I would have did that, see, I was so amped up. I thought Apple was going to run like a deer, and I came back, and on that Friday, the contract that I was in was already down 50%. So I was like, bet it can't go back no further. And then on Monday, Tuesday, and Wednesday, that joint traded sideways, and the price just took a fart.
See, I tell you, man. Listen, that's that trauma I'm dealing with, man. Because I would have never got that far. Once it's down 25%, I'm ghost. I learned that from Jay Johnson. When they hit 25%, just get out of it and then reposition.
I watched my other account double, and so I was like, I really actually ain't lose no money in the markets this week. It just looked like it looked like trauma porn in that joint. Like that joint, that one account
is $4,000, bro.
It is. Yeah, it is. It looked, but it was trauma porn though. Like it was crazy,
man. That's some people's monthly income, cuz.
Yeah. So
I mean, listen, man. If you're gonna be scared to lose money, you can't be in this game.
That's true.
Like, you cannot be in this game. I mean, I got bloodletted. I caught some bloodlet on that joint.
Listen, man, and shout to Demo. He said, just learned a whole new way to look at options. Going to have to watch this again 3 times. Yeah, man. Spoon came with that fire. Good info.
Yeah, so
appreciate that, Brandon.
Too much pump and dump in the penny stocks for sure.
100%.
Yeah,
but,
man.
And you can't get out. I'm worried. I know a lot of people riding the Tesla wave. So with that being said, I'm not worried about the Tesla stock. I'm worried about the ETF everybody's riding, and that ARKK joint. The spreads are so ridiculous on it. I'm worried about people can't get out. That's why I won't touch it.
Mm-hmm.
The spreads are too far wide.
But you can. My thing is, you can just buy QQQ. Why would you do that when you got a a joint with
Because
Tesla is traded in. You could
because
that's the Nasdaq joint.
because
Why would you do ARC when you could just do the QQQ?
because people want that exposure to Tesla. Like Tesla is their main component in that ETF. So people
Man,
want that exposure. So,
Yeah,
man,
but
listen,
so that's a good point. So Tesla, in terms of QQQ, what percentage of QQQ would you say that Tesla is versus like the ARC one? ARC is very high up there.
yeah, ARK is
ARC is
probably like I
it's
don't know,
number
like
one or
20%.
two.
It's
Yeah,
number
Yeah,
one, I
it's
it's
number
believe.
number
one. Isn't it? Yeah, it's number one on ARC. I don't know what it
It's
is on
number
QQQ.
one and number two is Square. And those are two companies I really love, but I'm not willing to buy ARK for those two companies though.
so that's why some of the ETFs I chose, like XLY, has a giant exposure to, you know what I mean, to Amazon.
Yeah.
And so having that giant exposure to Amazon, I didn't have to buy. I wanted to buy Amazon Jones, but I was like, for what? I could just
Yeah.
buy XLY and get 20% exposure to it just by buying that
I
one
mean,
joint. And
that's
so,
one of the reasons
like
why.
with XLK, Apple and Microsoft is the two main companies. I'm getting
Well, I
20%
mean,
exposure
that's what
to
MGK is,
Microsoft and
man.
Apple.
That's why
Huh?
MGK is like. That's why MGK is my bread and butter. MGK, everything Fang is in the top 10. Um,
Yeah.
everything Fang is in the top 10 as well as Home Depot, um, as well as like Nike. There's a lot of big companies in there as well. Malik said something about ARC here. He said ARC sold 20K shares of Tesla today.
Mm,
That's interesting. That's interesting.
It's like,
That's
look,
interesting. That's,
this joint at two
that's
racks,
interesting.
my fuck.
So
This
he
joint
gave
at
me the
two
game
racks.
yesterday, but now I got it on here. I can keep watching and executing.
he one of the brothers I was breaking it down to.
Okay, that's what's up. That's what's up. Yeah, man. Like,
See, I've been talking
you,
about this for weeks, how I changed up my strategy because I started just doing the math. The numbers was not, I was like, damn, these buy and hold positions is nice. And
Yeah.
you can give them to your kids. And God willing, nothing happened to me while I'm doing this, because even though my kids know how to do options, they don't know how to do the leaps and execute and do all of that kind of stuff. So I'm teaching them that right now. But so the buy and hold has its weight, and then the way I'm doing it, I plan on living for a few thousand years. So at the point where a year and a
you see,
half
but
from now,
again, but this is the difference in strategy though, because even you, Spoon, you still got buy and hold stuff too.
Yes.
But with you having leaps, how many? If you want to share this, is it a specific number of buy and holds that you want to have, like, or I know you said 3M is one of them. Like, do you?
Yeah.
Because for me, my buy and hold portfolio is very small in the grand scheme of things. It's less than 10 companies.
My buy and hold, I hold 7 companies in my buy and hold right now. I sold one recently when the market went down. I just didn't like the company anymore. The valuations, they had a lot of debt. So I have 7 companies, and all the companies that I do buy and hold, they all pay me a dividend, and I own a ton of shares in them.
Got you.
Some of the shares was given to me by my aunt when I was a child, so I still own them. So it's not something I would give up. Disney is one of them, but
That's one of mine. I'll tell
yeah,
mine to Disney, Johnson and Johnson, Coca-Cola, as you already mentioned. I've been talking to you about Coca-Cola for years.
Cool,
Like that's
forever. You won't
that's
even drink a Pepsi.
no, you damn right I won't. But Coca-Cola, Disney, Johnson and Johnson. I do have Square in my Dorsey portfolio, and I actually got some Twitter too. But that's money that came from like books. All my book money I put in the Square and in Twitter.
Okay.
And I'm trying to think what else. MGK. I'm like, that's just what I've been doing.
I believe everybody should have a buy and hold portfolio.
Mm-hmm.
It's still, you go back to the ownership. You still want to have a piece of ownership in something, and you could pass that down to your kids. Like, don't get me wrong, options is a great way to make money and leverage your money, but I still go back and still buy more shares of companies that I love.
my kids' portfolios, I have my kids' portfolios. Their portfolios are fine. I have that joint on automatic debit. You know what I mean? I have it set up. It's on automatic debit, and they eat every week. You know what I mean? Like, so I did add some stuff to their portfolio, because before their portfolios were all dividend paying stocks. But then when they changed the game on me and allowed me to put some other oh man, when we go buy fractional shares, I
Sure.
started to put some fractional shares of Amazon in each
Okay.
one of their portfolios because I wasn't paying 3 racks per share
As you shouldn't.
for my for them. And then I stopped buying the fractional shares and I just started buying the ETFs.
Yep.
But
Because
Spoon, the thing about it is with the strategies, like some of the advanced strategies, like even with the buy and hold, you still can print money with them. And that's
Yes.
why when I was talking to you a couple of weeks ago, that's what I was like, yo, this has been a game changer. This whole summer has been game changing for me because this summer is the first time I really started executing the cover calls the way I should have been doing.
Yep.
And it kind of changed everything. It like opened my eyes up. I'm like, I'm sitting here like, so I'm in the process of finishing up like one rehab property, and I got a couple other vacant properties I got to finish up. But I'm like you. I'm like, do I want to buy some more? You know what I'm saying? I still get the itch. I was talking to Malik today. I was like, I was asking him about a property. Like, I'm thinking about buying this, but I'm like, do I even want to do that anymore? Now that I understand how to print money off of equity in companies that you already own, it changes everything.
Yep.
It changes everything. Yeah, so to folks out there watching, man, like ask us any more questions that you have, man. We got a lot of good feedback in the comments on YouTube as well as Facebook about some of the strategies that you share, Spoon. So thank you for coming with those strategies because that's like next level, man. Like I'm telling you, man. And I didn't even let him really go fully in, you guys, because when he starts talking that Greek talk, he starts he starts spitting over people's heads. I had to rein him in, you know what I mean? Because Spoon like next level with this stuff, man. So real quick though, with that being said, if you can just break down, if you can, if it's possible, what would you how would you explain the Greeks?
All right. Delta is one of your probably your most important one. Delta,
the most important one.
So basically, Delta is basically the movement of the underlying. So if you're buying at the money, most at the money will be a Delta 50. Realistically, that's telling you you're controlling really 50 shares. Even though you have 100, you're really controlling 50 shares. So let's say the stock go up $1, your contract is going to go up 50 cents. Then the gamma also is the gamma is the delta of the delta. Basically, the gamma is telling you how far your delta would move. Vega V is simple, is the volatility within your contract. Theta, the theta of it is basically telling you, let's say you have a prime example, you have an option that's about to expire and you have a -8 theta. Now, let's say the underlying don't move, but you have a -8 theta. At that point, it's telling you you're going to lose $8 a day. That's basically what it's telling you. You're going to lose $8 a day. So if you're selling,
time decay. It's time decay.
Yes. So if you're selling options, you want a negative theta. Pretty much, if you have a negative theta at that point, it's telling you like, yo, we're bringing in $8 a day. It's a positive at that point. So basically, those are the main Greeks.
Gotcha.
But they tell you exactly how your option is going to move. That's why when most people buy out of the money option contracts, your underlying can move up, but your contract or your money basically is not going to move up as fast. So pretty much that's what it's telling you. So if you want to buy, if you can afford it, you want to buy high deltas, 75, 80s, because it's telling you basically when an underlying move $1, the delta is going to move 80 cents times 100. There you have it. So if you're buying out of the money and you're buying a 30 delta, it's only going to move 30 cents. Most times, 30 cents, it might not be worth it. And you could break down on probabilities. So if you sell it, that's why I asked you earlier. During my cover calls, a lot of times I'm selling a 25 to 30 delta. Reason being, I have a 70% chance the underlying ain't going to touch that. There's only a 30% chance the underlying will touch that. So you could break it down to probabilities too.
Yo, oh man, listen, I'm gonna have to watch this back myself because that even changes the cover call game if I start looking at it that way.
See, I mean, I understand the Greek, so that's the way I sell my cover calls. So sometimes I sell my, if I want to get rid of the stock, I sell my cover calls in the money.
Yeah, that's a good way to get rid of it.
Yeah, I know you, man. You've had that conversation before, but I was telling you, like, I don't do that because, well, first of all, if I own 100 shares of a company, that means that I want to keep it. Right? For me to get to the point where I own 100 shares, it has to be something that I wanted to keep. So I try to set it up the same way Spoon does, where my shares don't get taken. But I was always looking at it from like my how I got into it, right? So what's my average buy for each share, and where I'm going to sell at. So the way I was looking at it is like, yo, even if I lose these shares, I'm gonna make several $1,000s on that one side. You know what I mean? And then my strategy was, if someone takes the shares, I was just going to like try to buy it back at a certain price and sell puts until I get it back, and then run that same play over and over again. Yeah, man.
It's a good one.
Yeah, so that was a strategy I was looking at, man. But you gave me some more food for thought. I gotta think about this stuff some more now. Tesla is 10% of ARK. So here's the other ones.
Invitae, Square, CRISPR therapy.
Okay.
I'm just curious. Let me check something on ARK.
Appreciate that, Kamari. And stock market coach Carter, as we call him now, says he got to study the Greeks more now. Yeah, man. Like I told you.
All right. So a big red flag to me on ARK. I'm just looking at the trading platform. Does not have weekly options. So right there and then it's telling me it's not liquid enough for me. It don't have it only has monthly options. And even with the monthly options, it got August, then it skips to September, October, December, then it goes all the way out to March. So that's already telling me it's not liquid enough. Then they don't even have the bid and offers on this. So the bid and offers are 60-cent spreads. That's too far for me at the money. So it's not liquid enough. So I wouldn't even touch it at that point.
Yeah. Kamari says you like QQQ better. Way better.
QQQ is golden. Like, it's golden. That's a golden ETF. It's great. Yeah, SPY, yeah, IWM. All of those ETFs they've been around for years. They're golden ETF. They're going to have more than enough liquidity in them.
Yeah.
That's why I wouldn't buy ARK. I would much rather put on TQQQ, which is the 3 times, the 3 times QQQ or QQQ. Where the TQQQ gives you way, like, them Jones move super fast.
Triple leverage.
All right, so all right, that's another point, right? So you guys talking about something. I want you to explain that. Either one of you guys, like, because a lot of us are familiar with the QQQQ, but what's the TQQQ? How would you explain that?
It's just basically it gives you more exposure to the same companies, and so the 3 times leverage Jones, when they move 2 or 3 times faster because you got that 2 or 3 times more exposure because they got the 2 times leverage ones and the 3 times leverage, and so when it's moving up, them Jones move up way faster, and when it's going down, them Jones like a roller coaster. Them Jones.
So it works on both sides, though. That can harm you. That can help you or harm you.
Yeah. You can get knocked off real fast, or you can become an instant millionaire.
I've never touched one of them because I didn't fully comprehend it.
I actually had TQQ at the beginning of the week, and I made a lick off of T on Monday. Even though Apple was down, TQQQ was up 30% because it's an ETF.
Yeah.
So
this Corey, you was telling me about this a couple weeks ago. You was like, look at TQ. I said, TQ, that's the old singer bro. Like, what the hell are you talking about? TQ? Like, that's the boy that was with Cash Money. TQ. That's only TQ. I know.
Yeah, man. Yeah. So
I know what you're talking about because I never touched those because it didn't make sense to me. Like, all right, this is all the same companies. What the hell is the difference? Shout to Flight Race is telling about his holds. He said he buys and holds Microsoft, Apple, Voo, and Facebook. Yeah, those are, I mean, Microsoft and Apple. You can't go wrong with those. Voo, my biggest holding in my buy and hold is an index fund, which is the equivalent of Voo. And Kamari, don't cuss at me for saying I got an index fund. Yes, I got an index fund. So yeah, that's all good. That's all good stuff right there, Flight Race. That's a good buy and hold type companies.
Yeah. You're doing it major.
A couple questions out there, man. A couple things I want to ask you, Spoon, before we get out of here, man, because we had a couple things, and I want to get your perspective on this over the last couple weeks. Hold on, I'm laughing real quick at a flavorist.
Microsoft is Bay.
Microsoft is Bay.
Hey, we gotta share it because that's my Bay too. That's my Bay too. We gotta share.
So we had two. We had
that
two
boy bought
questions.
Microsoft all the time.
That's his thing. Listen, that's a great company. But we had the one question when Kamari was on here with us, and that question was who's in your top 5? Right? If you only had to buy 5 companies right this second, and these are the only 5 companies that you can go hold forever, and you only have 5, who's in your top 5?
Apple, Microsoft, Amazon, Johnson & Johnson, Procter & Gamble.
Okay, that was very fast. That was very fast. All right, so all right, no doubt. Procter & Gamble is an amazing company. I think that's one of them that made all of ours because they own pretty much everything. All right. So now, the next question was this: looking at Fang, if you had to pick one company out of Fang and ride with them forever, and you only can have one of them, which Fang stock would you run
plus
with?
M.
Fang plus M, yeah. Fang plus M.
Yeah. I know. I answered it last week. I said I went with Amazon.
Okay. What's your logic in that?
Amazon. One, I love Jeff Bezos as far as the CEO. Also, the cloud space is competing with Microsoft, and they're still growing at this point. And they're not scared to take on anything. And they showed me they could successfully buy another company and run it. So, a lot of other companies, they can make an acquisition of a smaller company, but sometimes it folds. They don't run it successfully. Amazon, to me, has proven it. And since they're still growing, I would probably stick with them.
Okay. All right. Well, fair enough.
Yeah, I won't argue with that.
Say less.
I wouldn't argue with that at all.
I mean, you can't go wrong with like none of that, man. And like, yo, this is definitely what this is, man. This is game changing information. Yeah, spooling the game down quite flat, man. And that's only like a portion of what you got to offer, man. Like, I appreciate you, man. It's being a valuable resource to me personally because I hit you up and ask you questions and you answer them because like I said, you have advanced strategies that you can use. And what I like about some of the stuff you talk about is it kind of eliminates the high risk. You talk a lot about protection, like insurance and things like that. How to insure yourself against loss, not just how to make money. But it's one thing to make money, but it's one thing to make money with taking less risk.
Yes. So I'll always think risk first, reward second. I need to know how much capital I'm putting at risk before I think about how much capital I'm bringing in.
Is that something you learned over time? While you were trading?
Yeah, when you blow up 2 or 3 accounts, then you'll know that.
Listen, because I had those naked calls out there, I just took my account took a fire fireball.
When you blow up 2 or 3 accounts, you'll think about your risk first before you think about your reward second. And don't get me wrong, I can have the perfect setup on some things, but sometimes the market just don't move that way. Sometimes we might get some news and the market moves against me, but I'm never worried about my portfolio. I'm always knowing exactly how much money I got at risk. So that's just something, and I had to learn that the hard way. I woke up to my brokerage calling me one day and telling me like, "Yo, you owe us like 10 grand. What you gonna do?" Like,
that's a phone call nobody wants. They hit you with they hit you with like the Duke and Duke joint off Trading Places. Like, yo, where that bread at?
So I squashed the beef and I wound up just switching brokerage.
That's a call nobody wants. Nobody wants that call. Yeah. So you learned, like you said, you learned the hard way. Oh man. Exactly. So that means that you was using margin all crazy.
Yeah, I was just risking it. I was just taking a risk. I didn't know what I was doing with options. And that's what really gave me like, yo, let's hit the brakes and really learn about what are options, what make a move, how they move. That's what really set me on my goal to really learn about the options. It's almost like buying a property. Like, it's easily to buy a turnkey property that's already cash flowing. But when you buying a joint that's need a 100% gut job, and you got to learn how to rebuild that thing, and you need to be there, and you're dealing with shitty contractors, it makes you so it makes you want to learn, like, yo, how the electric is supposed to be ran, how the plumbing is supposed to be ran, how the drywall is supposed to be set up. It makes you want to learn every step of the way. So that's what really stopped me. I was like, yo, I need to learn every step of the way of an option contract and how an option contract moves. So that's why I got into the greeds, and that's why I got into like really learning, like, yo, what option contract I should be buying, what option contract I should be selling. Also, what the big dogs are doing, how they making money. So that's exactly what gave me my game plan after a while.
And I know you answered this, but I just want to put it on the record. Like, so when people first start out, a lot of times they get mad at me because I tell them they need to learn the fundamentals of the stock market first, and they want to jump
100%.
right into options. So you agree with that then?
100%. I learned ass backwards. I learned options first. Then I started learning fundamentals of underlying companies. And I would say it took me that much longer. So my best advice first, learn about companies first. Learn about what you're buying first. Then learn about options.
Okay.
100%. Also, that will go into you learning the lingo, like learning the lingo of options. If I'm like, yo, I'm short 100 shares of Apple, you need to know at a strike price of 35 and I bought it for Delta 60. You need to understand the language of what I'm doing. If you don't, I'm like, yeah, the gamma is low risk gamma on it. If you don't understand it, then it's almost like what? Like it's for nothing at that point.
Man, that's a
So
great listen, that's great advice, man. If you can't speak the language of the industry, like you shouldn't be doing this. And
yeah,
that's why, like, in the conversation I was having earlier with Malik, I was like, the one thing I'm afraid of is how many people are going to get hurt because we've been in a bull run for a while at this point, right?
oh yeah.
And
When the
again,
volatility come back in the market,
my
a lot of
PTSD, man,
people are
and my
going to be
trauma
crying.
tell me people are going to get hurt, right? And I already know this. I could see it, but it's hard to tell people that when they're printing money on a daily basis. It's hard to tell people like, yo, you need to really learn. But, like you said, the
Learn.
market
Yep.
humbles us all. The market will humble you.
Yes, it does. 100%. It will humble
Yeah.
you fast and quick, especially if that when the volatility come back into the market. It's a lot of people going to be humbled, in my
Yeah.
opinion. And we do
And with
have
this,
a lot of new traders in the market.
yeah. And that's another thing about options that understand that there's always somebody on the other side. I think that's lost a lot of times.
Oh man.
Is understanding that, if you're on one side, there's somebody on the other side. There's
Yeah.
always somebody on the other side. Like, so
I was in crypto. I was on Coinbase. I think this was 2 weeks ago, 2.5 weeks ago. Just somebody on the other side thing, right? And Bitcoin was trading at like 12,500, maybe 12,600. And in 30 seconds, that joint went from 12,600 to 10,800 in like 30 seconds. That joint flash crash and then ran back up to like 11,000 in like 11,500, 11,600. And basically what that flash crash did is collected all of those stop losses, all of those $11,000 stop loss. I guess people was putting those stop losses on there, and a logarithm seen them joints, flash crashed the joint. And literally within 2 minutes, that joint went from 12,000 to 10,000 to 11,000 in a 2-minute span. And a lot of people got manhandled.
Yeah.
On that,
See,
and
that
happens in the markets too, like flash crashes, because the algorithms recognize the if everybody got the same stop loss, the logs will like that's like I trade Microsoft, right? And so a lot of people, either are buying selling puts or buying hedges, and so you get a lot in the morning. You get a lot of flash crashes on Microsoft. I know that. So I don't trade Microsoft in the morning, or I'll buy it in the morning. I'll sell it in the afternoon because I understand that in the afternoon, Microsoft runs harder in the afternoon than it does in the morning. So
that's why you always getting flagged, man.
I know.
Yeah.
That's why you always getting flagged.
Day trading rules.
Yeah, he always getting flagged.
I get flagged like once every 2 weeks.
That's why he got 17 TD accounts. But listen, Spoon, let me ask you a question. Do you mess with crypto at all?
No.
Okay. Is it a reason behind it?
I believe crypto is a great space to be in, but the banks are going to step in eventually. So when they step in, I'll step in.
Got you. And that's an interesting philosophy. One of the reasons that I am in this space a little bit is because I understand that the banks eventually will get in. Because I mean, when you look at it now, they're already there. To be honest with you,
They
because
already in.
a lot of these big
You
whales,
waiting.
when you look at
They're
the
there
athletes,
already.
they're
They're
buying.
here.
Yeah, they're there because what they'll do is like they'll tell you, they'll get on TV and say, "Yo, this is the worst thing in the world."
Grayscale,
Yeah.
JP Morgan, Chase, all of those, they're already in.
It's like
90% of crypto is owned by institutions already.
Yep.
So you don't have to wait for banks to get in.
Yeah,
They're
it's
already
interesting because
institutionally owned.
I was looking at something before, like when a lot of these when like after '08, when everything happened in the real estate market, and I would see these cribs get bought up by these weird LLCs, who was like, so basically what happened was the banks were getting bailed out, people were losing their homes, and these companies, like these properties, would go to like auctions and things of that nature. You see these LLC, you buy it, and I started looking up the LLC. And you do a couple like digs. It's like this LLC is owned by this LLC, and that LLC is owned by Goldman Sachs. I'm like, well, hold on. They just got the money getting bailed out for losing the property. Now they buying it under like 3 LLCs to hide it. Like the banks, the way they operate, yo, is like they're worse than the mafia, yo. The banks, what you call them, Corey? The cabal.
The cabal.
Yeah. They don't lose. They've set it up. Similar to how you set your trades up. They win. They win. They just
they're not out to lose. They're not out to lose. So 100%. They're not out to lose. So
here, what's going on, Jabbar?
Bro, what's up, bro? You said all of them here.
All the crypto.
About the banks. The banks said all of them. Yeah, JP Morgan bought crypto companies. Yeah, they did. After their CEO got online and it was like got on TV talking about it's all trash and all this, and now they own
3 years later. 3 years later, they own 90% of the space.
Well, that's a good thing though. Like as far as us as a community, we need to be able to see out into the future, especially like the younger generation. They can see the wave of things, and they into it, especially trending things, and they need to jump on that before the big dogs jump on it. And that's a good thing for our community.
He talking about the banks here. He said they are the mafia. Yeah, you're right about that. Yeah. I should say the words. They are the mafia. They really are.
The government is junior mafia.
So when you purchase an option contract, how much does it cost? Are you paying the share price for the company? No, you're not. You're buying a contract that you're controlling 100 shares with you're buying an actual options contract.
You're controlling 100 shares for a fractional cost.
Yeah, and they have their own price. Those contracts have their own price. Christine, when you get a chance, this will by the time I finish processing tomorrow, we'll be back on our YouTube channel. You might want to start this from the beginning because Spoon gave us all sorts of information, and it's very valuable. Jabbar right here says that JP Morgan spent $15 million in crypto.
Yep. So that's what I said. When the banks step in and they start buying, I'll step in and I'll start buying then.
Yeah.
So
absolutely.
Start buying because they already stepped in. Start buying.
Pretty much. That's just how I always felt about crypto. I remember everybody was on the wave a couple years ago of Bitcoin, this, Bitcoin that, and everything. Everybody was on the wave. That was one of my biggest shorts of that year. I was shorting the shit. And trust me, I took some pain. Because I started shorting it at like 16,000. So I took some pain in that trade. But it came to fruition in the long run. So I was happy with that.
No doubt. Absolutely, man. So listen, man, I'm gonna have you here all night, man, because I love getting information and game from you. But Spoon, appreciate your time that you spent with us, bro. And I'll make sure that within the section of the video or whatever, I'll put your IG link, man, so people can check out.
I gotta redo it. I gotta make it public, man. Everybody keep on getting on me because it's private. Everybody,
Spoon is the private guy. He ain't really out here promoting what he does and nothing like that. But and that's why I want to say thank you for sharing your time with us, because you're generous for your time with us, and I know you're a private guy, man. But I think that the information that you have, I wanted to bring it to the people because I think that it's very valuable. Anytime I talk to you, I learn something. It is amazing when you have somebody. Anytime you talk to them, you get a new piece of game. Every time I talk to them, I'm like, damn, I gotta look at this different now. Even this conversation right here, I'm talking to you, and I'm like, yo, I gotta go look at everything, man. The way you broke down leaps, and it's crazy because Corey told me the same thing, but it's just different the way you broke it down. But even that, when I combine what you two guys have said, now I'm going to look at leaps different. It's like I look at it like somewhere in the middle. It's not necessarily long term, but it's also not short term. It's somewhere in the middle. and I got to figure out how that works with my personal strategy. So, and that's the beautiful thing about trading and investing is everybody has their own strategy and their own way of doing things, and you got to do what works for you. But you shared a lot of information, giving a lot of game, a lot of plays out there. So I want to say thank you, man. And listen, man, you should make it public, man. Share what you got going on with the people because we need more people that look like us in the space making money.
I got to do better. Someone, I got to do better. I know someone just texted me like, "Yo, you got to do better." I got to do better with it. Someone also asked a coworker. All right, so someone just texted me like, "What did you do with Tesla this week?" Tesla, I did spreads on this week. Pretty much. Can I share my screen or no, Jimmy?
Let me say, yeah, you should be able to. It should say thing where it says share screen. Let me see if I.
All right, hold on. Let me set up my account real quick. I'm gonna show my Tesla position for this week.
Listen, man, you got people in the comments, man. Phil said he about to call you as soon as it's over. He got to call you, man. He's in.
That's Phil, my OG. That's my OG, actually.
That's what's up. Yeah, that's what's up, man.
I'm glad people was able to connect with you through our platform, man.
Yeah, man, because that's important.
Because like you said, you're a private dude, man, and so being a private dude, nobody would have ever known that you got this wealth of knowledge, like a actual wealth of knowledge.
Yeah, man.
And so at the point where you're able to share how much of that knowledge you have, like last week we had Camille on, who is the same kind of wealth of knowledge in the crypto space. And so
I could pull your screen up real quick. Christine, appreciate that. Definitely rewatch. It was a lot of value for me. Appreciate your support as always. Let's see if we can add Spoon screen to there. Let me see. So
it's coming up now.
You see it?
Okay. See.
Yeah, we can see it now.
So basically, I'm
a lot of reading there.
All right. So first thing, let's look at the dates. All the greens are the dates. Pretty much I was debited. I was buying Tesla. So one thing about me, I'm not going out buying Tesla. I don't buy any stock at an all-time high. That's not what I'm doing. So I don't gamble. I trade. I tell everybody that.
That's a bar.
At this point in time, right here, I bought. This is same strategy I told you. One strike in the money, one strike out of the money. I bought this one for $235. I bought this one for $238. This one I had in at $250. I was trying to get filled. They didn't fill me at $250, so I canceled it. And you can look. I put it right back in at $329. So I put it right back in, and I got filled at $250. The next day, the 13th, I'm selling these joints off. So the first one, I got filled at $310. That's a 30. That one was a 30% profit. I tried to get filled again. They didn't fill me. I canceled it. Tried to get filled again. Canceled it. Tried to get filled again. Canceled it. This is me working my orders. I'm not leaving money on the table. Pretty much, I want to get filled, but I'm not leaving money on the table. Tried to get filled again. I canceled it. I finally got filled at $316. Another 30%. Now I'm making 30% on my money within pretty much 24 hours. I put the trade on the 12th. I'm taking these joints on the 13th. This is me riding the FOMO of Tesla. So this one I held on to. I tried to get filled, cancel. I tried to get filled, cancel. My fill for that day, it expired. So pretty much I didn't get filled that day. I held on to it. Tesla went up again. I waited until the 17th. So pretty much this day, 370. This is my 55% at this point. I got filled at 370 for the same trade. So I did 3 trades, 3 spreads over. One of them was 24 hours. The other one was 5 days, pretty much. 2 of them, I got 30%. The third one, I got 55% on. But you got to remember, I didn't go out and risk $1,000 for Tesla. I went out and I risked $235, $238, $250. That's what I risked. So like I said, it was a FOMO trade because pretty much I wanted to get into the wave of Tesla going up, but I didn't want to put that much money at risk because I already know a stock like Tesla is volatile and it can come right back down in your face. So that's why I didn't want to put that much capital at risk. I did my spreads. I got in, I got out, and that was that.
Valuable information, man. As always, man. I got one question based upon what you just showed. Like, when you do that and you don't get filled, like how often do you let it ride for the day, or do you like just go back in every like couple hours, or how much time in between?
Some of them was doing it within like seconds because you can look and see, like, yo, this spread is worth $3.30. So y'all should be filling me at $3.30. The market makers sometimes they're like, no, we'll fill you at $3.29. What, I'm going to cry over a dollar? No, go ahead, take your dollar, get me out of my trade. Pigs get slaughtered in the market. I'm trying to get out my trade. I made my 30%. As far as that, that's how pretty much. So I'll go in, and I call that working my order. I'm working my orders. I'm working my orders back. I'm not going out on the market side of things. Like, I'm not going to let the market dictate to me. Pretty much, I'm going to keep on working my orders, working my orders, working my orders until I get a fill. So the last one, I didn't get filled that day. I held it. The stock still went with me, and I wound up. I did what Corey would say, a GTC. I just put a good to cancel order on that one. I said, once this spread hits 55%, get me out. It hit 55%, and it got me out right there. So
Okay. So
I
you said
wasn't looking.
so some of them is like right away. You'll see right away whether it's going to get filled or not.
Yeah, you can see, like with Thinkorswim, you can see how much your spread is worth. It'll tell you, like, yo, this spread is worth $100. So if I know it's worth $100, I'm going to try to get filled at $100, 101. Because I got to pay commissions. I got to pay 50 cents for my commission or 60 cents for my commissions. I want y'all. Yeah,
commissions is 67 cents going
so
in and
I'm
out.
like, I want y'all to pay my commissions too. So
Okay.
yeah, so I'll work my orders. I'll continuously to work the order or whatever on some of my spreads. But once you're in the trade, it's not something I have to go back and look at. The only reason why I went back and looked at it the next day, because one of my rules is if I go into that type of spread and I can get 30% within the first 3 days, I'm out. I got 30% of my money. If it goes beyond that 3 days, I'll wait and get 50 to 55%. So I don't need 100% in a trade like that. That's not a trade I'm looking for 100%. And
Now, do you believe in cutting your losses? Is there a certain percentage going the other way that you just get out and reposition? Is that something that you do, or you have a different?
sometimes I will look at, depending on how the stock move, I'll look at like, yo, this joint not going to hit. Let me try to save some of my capital and get out. Sometimes I'm like, no, this is what it is. Like, if this is the spread I'm doing, and this type of spread, I'm risking one to make one. So pretty much, if I'm buying the spread for $2.30, that's how much I can lose. I don't need a stop loss. I know I'm willing to put my $2.30 at risk. That's $230. I'm willing to put that at risk. So pretty much, I'm willing to lose that whole $230 with that type of strategy.
Got you.
So,
man, listen, man.
but it got me in Tesla cheap though. So I got in Tesla at $230. I ain't had to put $1,000 of capital at risk or $2,000 of capital at risk. I got into, yeah, I couldn't make as much as everybody, but at the same time, realistically, you're buying a stock that's at an all-time high. That's never a good time to buy in.
No, it's not. It's never that. I mean, unless that thing run up like it's some A shares of Berkshire, then like you gonna look back and see.
So something like that, like crazy.
if it does that, then we got different thoughts. But until then, you know what I'm saying? You already know, man. And for those out there, that's right. Like the flight, I appreciate you again, man. Smash that like button, man. Especially those watching this on the repeat, man. Listen, Spoon, though, like I just want to say thank you again, man. And you got people like in the comments, they're gonna be calling you once you're done because you done laid the game out quite flat and got people interested in this game, man. But you gotta share more, man. Because listen, you are a wealth of knowledge, man. Our community needs the information that you have, man. And you experienced everything, man. One of the things we started with for those just watching was Corey and Spoon talking about like the days losing. Anybody can show you their screenshots when they're up 1,000%, 2,000%. But who's willing to show you when they lose bread? Not too many people are willing to have that conversation. And to me, you're not a real trader until you do blow an account up. Like you got, not that I want anybody out there blowing accounts up, but I feel like you need that,
Real trader in the house. Two accounts blown straight to hell, and damn near blew this one to hell just playing around, messing with
Listen,
Microsoft.
man, But now that they got people that can teach you the game, like they went through that, so hopefully you won't have to go through that. To quote Jay-Z, but like, so Spoon, man, listen, appreciate you, bro. I'm going to put your IG link in all the different venues that we share this video. Yeah, man, and so you'll probably have people hitting you up, but just want to say thanks again, bro. Thanks for your time, man. We'll have you back on here soon, man. Yeah, man, definitely spitting that fire, man. And salute the Will for checking in, man. But yeah, man. Just thanks, bro. Just thanks for everything you do, man. And I'm always gonna pick your brain, so I'll meet you up again, man, because you gave me so much to think about, man. As a matter of fact, I ain't gonna bother you tonight, man, but you'll be hearing from me soon because I gotta process everything that you said in this video. For those just checking, make sure you go back and watch it. I gotta rewatch this myself before I hit Spoon up and ask him questions because like he got me looking at everything sideways now, man.
I already know, man. We need to get on the Zoom because you got to show me how you set the spread, how you set your spreads up.
Yep, that's no problem.
Because when I was trying to set that joint up, set them up myself, I had to keep calling TD to help me set them joints up because there's so many numbers and colors and it's like damn, it's like 17 joints you got to click on the joint.
We can break that down short and simple, man.
Okay,
it ain't that hard.
We'll talk offline, man. We'll talk offline about that, man. For the folks out there, make sure that you share this video with your friends, family, and get this knowledge and this information, man. Make sure you follow us on all platforms at By the Hood. I just want to say a shout out to everybody who showed me love this week because you see my name, the meme legend, because the memes have been on fire this past week on at By the Hood. and yeah, I'm saying I got it's crazy. I got inboxes from like from celebrities and NFL athletes like, yo, that was fire. I'm like, all right, well, share it then. Like, cut the check. Yeah, but anyway,
share it on your platform.
So shout out to everybody who show us love on socials. It's at By the Hood. On YouTube is at By the Hood. Facebook is at By the Hood. And Spoon, again, I can't thank you enough, man. But we'll check y'all next week. We're here every Friday live at 7 p.m. talking about business, investing, for our community. So we'll be back here next Friday. Our podcast that we have coming up. So our flagship show is the By the Hood podcast is every Wednesday. This Wednesday, we have a podcast from a young gentleman. This brother's like 25 years old and already killing it in the real estate game. Like, he's bought 5 properties within his first year of real estate. So that podcast is going to be amazing. That's coming up this Wednesday. The one that we have out now is another amazing podcast with Bro Capital. It's a company owned by some young black brothers from Morehouse who have their own financial institution. So check that out. And then last week we had the Ivy Investor on as well. So check out our podcast, man. Spoon has also been on our podcast before too and told his personal story of how he got into investing. So we shared a lot of information now, but if you want to hear about how he got started in investing, go back and check out his episode on our podcast because that was a dope episode as well. But for everybody out there, man, listen, we appreciate you. Thank you for all the support. Oh, yeah, Malik got here throwing shots at me, so I got to show that, man. He said, he called me a stunt man for talking about my meme game, man.
Hey, man, when you're the best at something, you can say whatever you want, man.
Christine, appreciate you as always. Malik, I just got to say, man, like, I'm really the greatest at the finance meme game. I'm the GOAT, and it is what it is, and y'all got to deal with it, man. But for the folks out there, we appreciate it, man. Next Friday, we'll be here live. Check out the podcast, and we'll talk to y'all guys another time. Peace.
Appreciate it.
No doubt. Appreciate you, bro.